What is up, Bitcoin Bulletin crew? Get ready for a rapid-fire update that you absolutely cannot afford to miss. The market is moving at warp speed, and we've got the inside scoop on the shifts that matter most. From groundbreaking investment strategies to critical market signals, we're diving deep into the stories that are shaping the future of digital assets. You think you know what's happening? Think again. We're breaking down the complex into the digestible, bringing you the insights that will keep you ahead of the curve. Are you ready to level up your knowledge? Let's get into it. First up, we're dissecting the intricate dance of Bitcoin mining equities. We're talking about strategic entry points, the powerful influence of Nasdaq listings, and how current market dynamics are creating unprecedented opportunities for savvy investors. This isn't just about mining. It's about understanding the underlying mechanics that drive value and where the smart money is flowing. Get ready for a deep dive into the equities that could define the next wave of growth. Then, we pivot to Bitcoin's evolving role in the financial ecosystem. We're exploring its powerful transition from a simple transactional currency to a robust passive collateral asset. This shift is monumental, paving the way for strategic reallocation and seamless DeFi integration, all aimed at generating long-term wealth. We'll unpack how this fundamental change is unlocking new potential and redefining Bitcoin's place in your financial strategy. Next, get ready for a seismic event in the crypto world, a major merger and a Nasdaq listing for American Bitcoin. This isn't just another company going public. It signifies a new era for crypto exposure, potentially opening the floodgates for broader institutional and retail investment. We're analyzing what this means for the market and how it could directly impact your portfolio. And finally, we tackle the burning question on everyone's mind. Is Bitcoin's legendary bull market hitting a critical inflection point? We're looking at the charts, the data, and the sentiment to bring you a clear, concise analysis of where we stand and what might be coming next. Don't miss a single second of this essential update. Make sure to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat on Bitcoin Bulletin. Strategic entry points in Bitcoin mining equities, capitalizing on Nasdaq listings and market dynamics. Navigating the volatile landscape of digital assets requires more than just understanding Bitcoin itself. It demands a keen eye on the infrastructure and companies that power its ecosystem. This is particularly true for Bitcoin mining equities, where strategic entry points can unlock significant returns, especially when influenced by major market events like Nasdaq listings and evolving market dynamics. Identifying these opportunities requires a deep dive into how these companies operate, their financial health, and their positioning within the broader cryptocurrency market. The recent focus on Bitcoin mining stocks highlights a crucial trend. As Bitcoin adoption grows, so does the demand for the computational power needed to secure its network. This increased demand directly translates into opportunities for mining companies. However, not all mining stocks are created equal. Success hinges on factors such as operational efficiency, energy costs, hardware advancements, and critically, how these companies are presented to the public market. A Nasdaq listing, for instance, is not merely a change in ticker symbol. It often signifies a maturation of the company, increased regulatory scrutiny, and access to a wider pool of capital. When a Bitcoin mining company successfully lists on a major exchange like the Nasdaq, it signals a new level of legitimacy and accessibility. This can attract institutional investors who may have previously shied away from the perceived volatility and regulatory uncertainty of the crypto space. For these companies, a Nasdaq listing means greater transparency, stricter financial reporting requirements, and a potentially broader investor base eager to gain exposure to the digital asset sector through traditional equity markets. This can lead to increased liquidity and more stable stock valuations compared to companies trading on smaller, less regulated exchanges. Furthermore, the prevailing market dynamics play a pivotal role in determining strategic entry points. Factors such as Bitcoin's price action, global economic conditions, interest rate policies, and even geopolitical events can all influence the performance of mining stocks. For example, during periods of high Bitcoin price appreciation, mining companies typically see their revenues soar, making their stocks more attractive. Conversely, during market downturns, these stocks can become more volatile. Savvy investors look for moments when market sentiment might be overly pessimistic, creating an opportunity to acquire shares at a discount, anticipating a future recovery or continued upward trend in Bitcoin's price. Understanding the cost structure of mining operations is also paramount. Companies that have secured access to cheap, renewable energy sources or have invested in the latest, most efficient mining hardware are better positioned to weather price fluctuations and maintain profitability. Their ability to scale operations effectively, manage debt, and innovate in their mining techniques are all critical components that contribute to their long-term success and attractiveness as investments. Audience impact. Investors are keenly watching these developments, with online forums buzzing about which mining stocks offer the best risk-reward profile following recent listing news and market shifts. Bitcoin's transition from transactional currency to passive collateral asset, strategic reallocation, and DeFi integration for long-term wealth generation. Bitcoin's journey in the financial world has been nothing short of revolutionary, evolving far beyond its initial conception as a peer-to-peer electronic cash system. Today, a significant paradigm shift is underway, with Bitcoin increasingly being recognized and utilized not just as a transactional currency, but as a powerful passive collateral asset. This transformation is fundamentally altering how individuals and institutions approach wealth generation and financial strategy, particularly within the burgeoning realm of decentralized finance, DeFi. The core of this transition lies in Bitcoin's unique properties, its scarcity, its decentralized nature, and its growing store of value narrative. As more capital flows into Bitcoin, and as its network effects strengthen, it becomes a more reliable and robust asset for securing loans, facilitating complex financial transactions, and participating in yield-generating activities. This is a stark contrast to its earlier days, where volatility often made it a risky proposition for anything beyond speculative trading or limited transactional use. In the context of DeFi, Bitcoin's role as collateral is particularly transformative. Platforms built on various blockchain networks are now enabling users to lock up their Bitcoin holdings to mint stablecoins, borrow other digital assets, or earn interest. This process, often referred to as Bitcoin-backed lending or collateralization, unlocks the liquidity of Bitcoin without requiring its sale. For holders, this means they can continue to benefit from any potential price appreciation of Bitcoin while simultaneously engaging in income-generating activities. This strategic reallocation of capital is a game-changer for long-term wealth accumulation, as it allows for a more efficient use of assets. The integration of Bitcoin into DeFi protocols is not without its technical hurdles. Bridging Bitcoin, which operates on its own independent blockchain, with other smart contract platforms like Ethereum or Solana, requires innovative solutions such as wrapped Bitcoin, WBTC, or other tokenized representations. These mechanisms ensure that Bitcoin's value is accurately reflected on different networks, allowing for seamless interaction with a wider array of DeFi applications. The development and adoption of these bridging technologies are crucial for the continued expansion of Bitcoin's utility as a collateral asset. Furthermore, this shift signifies a maturing of the cryptocurrency market. As more sophisticated financial products and services emerge, built upon the foundation of foundational assets like Bitcoin, the crypto space begins to mirror and even innovate upon traditional finance. The ability to use Bitcoin as collateral for loans or to participate in decentralized exchanges broadens its appeal to a more diverse set of users. From individual investors seeking yield to larger financial institutions looking for new avenues of diversification and capital deployment. The long-term implications are profound. By establishing Bitcoin as a reliable collateral asset, the market is building a more robust and interconnected financial ecosystem. This not only enhances the utility of Bitcoin, but also contributes to its potential as a significant store of value and a key component in future global finance, driving opportunities for sustained wealth generation through strategic financial planning and DeFi integration. Audience impact. There's immense excitement within the DeFi community about these developments, with many users sharing strategies for leveraging Bitcoin as collateral to maximize their earnings. The strategic merger and Nasdaq listing of American Bitcoin, a new era for crypto exposure. In a move that signals a significant evolution in how the traditional financial markets interact with the cryptocurrency sector, American Bitcoin, a prominent entity in the digital asset space, has announced a strategic merger followed by a listing on the Nasdaq Stock Exchange. This dual development is more than just a corporate announcement. It represents a pivotal moment that could redefine the accessibility and perception of cryptocurrency investments for a broader audience. The merger itself brings together key players within the crypto industry, aiming to consolidate resources, expertise, and market reach. While the specific details of the merged entity's operational synergies are still unfolding, the overarching goal appears to be the creation of a more robust and competitive force in the digital asset landscape. Such consolidations often lead to increased efficiency, enhanced product offerings, and a stronger market position, all of which can be attractive to investors. The subsequent Nasdaq listing is arguably the more impactful aspect of this announcement. Listing on one of the world's premier stock exchanges brings a level of mainstream recognition and regulatory compliance that is often sought after by companies operating in nascent or evolving industries. For American Bitcoin, this means adhering to stringent reporting standards, undergoing rigorous audits, and opening its doors to a vast pool of institutional and retail investors who prefer the familiarity and perceived safety of traditional stock markets. This Nasdaq debut is particularly noteworthy because it provides a direct, albeit regulated, avenue for investors to gain exposure to Bitcoin-related ventures without necessarily holding the cryptocurrency itself. This can be a crucial differentiator for individuals who are interested in the growth potential of digital assets, but are hesitant to navigate the complexities of self-custody, private wallets, or the regulatory uncertainties that can sometimes accompany direct crypto holdings. By investing in a Nasdaq-listed company that is strategically involved with Bitcoin, these investors can participate in the market's growth through a more conventional investment vehicle. The implications of such a listing extend beyond the company itself. It sets a precedent and potentially paves the way for other cryptocurrency-focused businesses to pursue similar paths. As more companies achieve this level of integration with traditional finance, it can foster greater trust and understanding of the digital asset class, encouraging further innovation and investment across the entire crypto ecosystem. The market dynamics will likely shift as more capital is channeled through these newly accessible channels, potentially influencing Bitcoin's price and adoption rates. Moreover, the strategic decision to merge and then list on Nasdaq suggests a calculated approach to long-term growth and market penetration. It indicates a commitment to building a sustainable business model that can withstand market fluctuations and regulatory changes, while simultaneously capitalizing on the increasing mainstream interest in cryptocurrencies. This move is a strong indicator of the industry's maturation and its growing integration into the global financial system, marking a significant step forward for crypto exposure. Audience impact. The crypto and investment communities are abuzz with discussions about the potential impact of this Nasdaq listing, with many anticipating it could unlock significant new capital flows into the sector. Is Bitcoin's bull market reaching critical inflection point? The relentless ascent of Bitcoin has captured global attention, fueling a bull market that has seen unprecedented price surges and widespread enthusiasm. However, as prices reach new heights, a critical question emerges for investors and analysts alike. Is this powerful bull run approaching a significant inflection point? Understanding this potential juncture is paramount for anyone involved in the cryptocurrency markets, as it could signal a shift in momentum, either towards further sustained growth or a period of consolidation and correction. An inflection point in a market cycle refers to a moment where the trend's direction changes. In a bull market, this could mean the peak of rapid price increases, leading into a period of sideways trading, a minor pullback, or even a more substantial downturn. Identifying such points requires a multifaceted approach, analyzing various technical indicators, on-chain data, market sentiment, and macroeconomic factors that can influence asset prices. Technically, analysts are scrutinizing price charts for patterns that suggest overbought conditions or potential trend reversals. Indicators such as the Relative Strength Index, RSI, moving averages, and trading volumes are closely watched. A consistently high RSI, for example, might suggest that Bitcoin has been bought too quickly and could be due for a pullback. Similarly, a decrease in trading volume accompanying price increases can sometimes signal weakening conviction behind the rally. On-chain data provides deeper insights into the actual behavior of Bitcoin holders. Metrics like the number of active addresses, transaction volumes, and the flow of Bitcoin to and from exchanges can reveal whether retail and institutional investors are accumulating, distributing, or holding their assets. For instance, a significant outflow of Bitcoin from exchanges might indicate that investors are moving their holdings to cold storage, anticipating long-term price appreciation. Conversely, large inflows into exchanges could suggest that holders are preparing to sell. Market sentiment, often gauged through social media trends, news coverage, and fear and greed indices, also plays a crucial role. Extreme optimism, often termed FOMO, fear of missing out, can sometimes precede market tops, as the last wave of buyers enters the market at inflated prices. A shift towards more cautious sentiment or even a degree of fear might, paradoxically, signal that the market is becoming healthier and more sustainable. Macroeconomic factors cannot be ignored. Global economic conditions, inflation rates, interest rate policies from central banks, and regulatory developments concerning cryptocurrencies all have the potential to impact Bitcoin's trajectory. For example, if central banks begin tightening monetary policy or if new regulations are introduced, it could create headwinds for risk assets like Bitcoin. Ultimately, determining whether Bitcoin is at a critical inflection point involves a complex interplay of these factors. While the bullish momentum has been strong, vigilance and a thorough analysis of all available data are essential for navigating the market effectively. Investors must be prepared for various scenarios, understanding that even in a strong bull market, periods of volatility and correction are normal and can present new opportunities for those who are well-positioned. Audience impact. The question of whether the bull market is peaking is a dominant topic of discussion across crypto forums and financial news outlets, with many users debating the likelihood of a significant price correction. And that's a wrap on today's essential updates. We saw strategic moves in Bitcoin mining equities, Bitcoin evolving into a passive collateral asset, a major merger and Nasdaq listing for American Bitcoin, and we questioned if Bitcoin's bull market is hitting a critical inflection point. Stay informed, stay invested, and keep building that wealth. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for all your crypto insights, hit the notification bell so you never miss an update, drop a comment below with your thoughts, and follow us on all social media platforms to join the conversation.